I got some big news. I'm going to be a dad. And I'm ready. I think I'm ready. I mean, nobody is, right? Until the kid is born. But I've been thinking a lot. And one of the things I see a lot of people that are becoming parents think about is, should I buy my own place, right? Like, don't get me wrong. I really like my place. I think it's a great apartment, especially if you're living in Tokyo, which, it's a city with shoeboxes for houses. And this is quite a nice place. Like, I can definitely fit a kid here somewhere. But you don't own it. Every month I pay rent to someone else. And logically, it makes so much sense to buy your own place, right? All of a sudden, you own the place and you just have to pay down your mortgage to one day own it fully. While now, however long I live here, I will never own this apartment. So I've been looking around and, just 20, 30 minutes from a station like Shibuya Station, which is super central, or even Tokyo Station, you can find houses for, from 500,000 yen for a little bit older house to 1,000,000 yen for quite a new, pretty good space. So I've been looking at it from an investment perspective. And it turns out owning your own place is kind of a stupid idea from an investment perspective. And so in this video, I'm gonna show you why that is. I'm gonna bring out the most common argument for why you should buy a place and debunk them one by one. And by the end of the video, you might be as sad as me to realize that renting this place might be the best investment I've ever done. Let's go. Buying a property saves money. Again, sounds so logical, right? You've been renting your place, wasting money, throwing money away to someone else that's getting rich. But if you buy a property, you're actually paying to make yourself richer by owning the place in the end. This sounds so good on paper. But let me show you something that will debunk this. This is the rent to cost of buying a property in different places in the world, namely Tokyo, New York, London, and Stockholm. And as you can see here, Tokyo says 38. Simply put, that means you have to spend 38 years of rent to get to the purchase price of said property. Okay, but let's say you went to New York and wanted to buy a property there. There, you only need 20 years worth of rent to buy your own property. So you think maybe it's a good investment there. Well, it turns out that yes, the rental yield is actually 6% in New York, which is almost double of that in Tokyo. But the problem is American interest rates are super high right now. In fact, you'll be lucky if you get interest rates under 6%. And in many cases, it's more like 7 or 8% interest rate on your mortgage. So at the end of the day, you actually pay more in interest rate than you get from renting out your place. And I can already hear you say that I'm missing the point here, which is why I'm presenting argument 2. When you own, you pay into your property and not the landlord. And this is true. Every year you pay off your loan, you are one step closer to owning your property. But there's a lot of things we conveniently forget about the costs of owning your own place. Take a look here. This is a graph of all the things that you pay for additionally to the property you just bought. Here you can see that we have things like maintenance, insurance, property tax, and mortgage interest rates that all pile up. And many of those things you probably haven't even thought about. Just look how big they are here, right? There are two costs that are not in this graph. And the first one is opportunity costs, right? When you buy a property, so much of your savings are thrown into paying for that property and the mortgage. And this is money that is fixed into the asset, meaning that if you get any other opportunity to invest, you can't really take it because all your money is locked into your house. And on top of that, there's the cost of losing your freedom. Yes, this is very intangible, but it's still real Meaning that, let's say you get a job in another state, another country, another city, whatever, you need to move, but your house can't move with you. So now you either have to rent a house somewhere else or sell your house for the cost of a real estate agent, etc., just to buy another house, which is a huge cost. If you were renting, sure, there might be some cost of terminating the rental contract early, but then you have terminated it, no extra cost there, you can move anywhere and start all over again. Okay, I'm glad you stuck with me this far. And maybe you're even convinced by now that you should hold off on buying a property for investment's sake. But just to be certain that you understand how much it costs to buy your own property, I want to present the last argument I hear often. And that is that, sure, buying a property might not be as an amazing one investment as you thought, but it's still a very safe and solid investment. And in fact, buying a property is a much safer and much better investment than the stock market, which can go up and down all the time. And you always hear people losing all their money on a stock bet, and you don't hear the same thing with housing. Let me debunk this argument for you. First, let's start with debunking that housing is a great investment. Take a look at this graph. This shows the average annual return of the S&P 500, the biggest stock index in the world, versus buying a house in the US. Here you can see that the S&P 500 since 1992 to 2024 has delivered around 10.3% annually, while housing has only delivered 4.6%. That's less than half. Okay, let's stop here for a little while. I know what you're thinking. Well, sure, okay, so maybe the S&P 500 had delivered more money in the long run, but if you have a house, you own the place. You don't have to pay rent. That is a huge cost for anyone, right? And that is true. So let's factor that in. You see this graph here? It shows two paths. The blue path being path B, you rent and invest in S&P 500, and the yellow path being path A, you buy a house. Let's do some math here. Let's say you start with a house that costs $121,500 and it appreciates 4.5% annually, which is the average. At the end, you would have $435,000, which is great, right, in 2024. However, you'd also have to pay, as I said before, right, for maintenance, property taxes, and insurance. So conservative estimates of these costs would be 1.5% of the house value each year. So over 32 years, the same 32 years, that would be $126,000 in expenses. So at the end, you would gain around $309,000 after all costs is paid. Now let's go to path B, the blue line. So the $121,500 goes straight into the S&P 500. Now, at a 10.5% annual return, your investment would grow an astonishing $2.98 million. But of course, you have to pay rent for all these years, right? So let's add the total rent. So the total average rent, including inflation, comes to a total of $307,000. That's a lot of rent. But very important here is that the final net position is $2.67 million. You've made $2.3 million more in net worth. That gap, as you can see in the graph again, is huge. All right, but maybe the US is just not the place to be to invest in, right? Let's look at some other places. Here's London, Stockholm, and Tokyo again. Let's say you do the same thing of investing either in a house or the local stock market for 32 years. London, you can see that it's actually been quite a good investment to buy a house. But that's just because housing have grown so much compared to almost any other place in the world. You'd still have less money in the end than if you invested in the London stock market. Now let's look at Stockholm. So here in Stockholm, you can see, yes, the stock market has been booming for the past 32 years. So you definitely made more money. But just how much more, right? You can see that it's almost 3 times as much money buying the Swedish stock market index compared to owning a property outright. Now, Tokyo is interesting, right? Because actually the Tokyo stock market has been very, very weak over many years. However, because of the last push, you actually have made more money in Tokyo if you invested in the stock market. I hope I have convinced you that buying a property might not be a great investment. And in fact, it might be kind of stupid. But that doesn't mean I'm against buying property. It really doesn't. If you feel like you want to own your own place, buying a property is a must. You're safe there. You're secure and nobody can take that away from you, except, well, the bank if you haven't paid your loan. But it's so different from renting, right? Because you can get kicked out at a rental place much, much easier than you can at a place you buy. And at the end of the day, we live to live. I know it sounds so obvious, but seriously, like, if you want to have a place that you can call home and live there for generations and maybe even give the house to your kids, buying a property is the only way. But we shouldn't think of it as the only option. And we definitely shouldn't think of it as the right investment choice. It is a bad investment choice. And you're much better off investing in the stock market. In fact, I want to give a handout to all the people renting that feel ashamed of it or feel like they're wasting money, that actually you're making a sound financial decision. And you should be proud to rent because it frees you up. It frees you up to do things easier. You can move easier, you can find another place easier, and you can invest money that's not tied up anywhere easier. So, if there's only one takeaway you have from this place is reconsider buying a property if you don't have the cash or if you feel like you're going to move somewhere, and really think of it. Do I want to buy property? Like, in my heart of hearts, do I really want to buy a place and take on this financial burden? And if the answer is still yes, if you deeply, truly feel that you want to own property, you should.